We all expected this to happen. In fact, I don't think it would be a surprise to anybody if Donald Trump slapped tariffs on the rest of Chinese goods. How does this affect your outlook for the global economy?
I think trade talks continue to dominate the agenda going into the fourth quarter of this year. However, what I am keen to point out to investors both in the US and Europe is that a lot of these trade tensions are really around renegotiations between the US and other trade partners. What we're not seeing at the moment is the US ripping up the script and walking away from trade talks entirely. That's a very different dynamic, and I think that would prompt a bigger risk-off move. Right now, I think there's been a lot of progress being made with trade talks, and I think investors have been rewarding that process as we've moved into the fourth quarter, particularly in US equity markets.
This isn't going to be the kind of thing where everybody gets something that they want out of renegotiations, right? I mean, China is going to have to give up a little bit in order to solve this. Do they have to? Is there enough pressure on them that they, at some point, are going to have to come back to the table and renegotiate with Donald Trump?
Sure, and I think this is definitely the most complicated bilateral trade discussion going on between the US and China, rather than some of the others that are on the table, such as NAFTA or the US and Europe. The reason why it is so much more complicated than any of the other relationships is because what we're dealing with is essentially the relationship between an established superpower such as the United States and an emerging superpower such as China. Now, this is going to be a prolonged, drawn-out discussion period, and there's so much more on the table than simply trade. We also have intellectual property issues. We also have issues about US businesses getting a foothold in China. You also have political issues such as North Korea. These issues are broad-ranging. It's going to take some time to resolve. Any long-term investor, however, should frankly get used to these tensions between these two powers as they learn how to coexist together and play in the sandpit. It's not going to be easy over time.
Alex, good morning to you. So we'd have to get used to this being a prolonged affair. Jack Ma was talking about this going on for decades, perhaps. I saw on Saturday that China called off talks with the United States, we've been saying, but also saying that this was partly because the State Department had sanctioned China's defense agency and its director. I just wondered if this, adding a sort of defense dimension to already tense economic trade talks, is a new departure and something we need to watch for, and something that won't be priced into markets if this started to have a sort of military dimension to it.
Yes, I think it's still very early in the days to start worrying about taking this down the sort of massive military conspiracy theories that some people have talked about with these two superpowers coming together. At the end of the day, it works for US and China to cooperate, whether that be on trade, how they operate in financial markets, and they can grow together. But establishing those ground rules, establishing the dynamics that allow these two established and emerging superpowers to play in the sandpit together is not going to be easy. And there are going to be these tensions. I think investors are still getting used to them, particularly in the Southeast Asia Pacific markets, where I think this is playing out particularly aggressively. That's where I think you're still going to see some challenges going forward over the next few months.